Guys, it's not good out there. You know that, I know that. And in the US, it's likely to only get worse over the next few weeks. When I first started this channel, it was because I felt like there wasn't great content on commercial real estate out there that felt relatable to me as a real estate professional. And as much as I don't want to talk about this, this is a reality for people who are looking to break into the business or are active or first-time commercial real estate investors. So my goal with this video is not to perpetuate fear and panic, but rather to tell you what might happen over the coming months in commercial real estate and how this might create some sort of a ripple effect and what you can do as an individual, whether you're looking to work in the business, currently working in the business, or if you just want to invest in commercial real estate on your own. So with that all said and out of the way, the reality is that a lot has happened over the last few weeks and a lot will continue to happen over the coming weeks, including closures of schools, stores, restaurants, gyms, and other public places across the US with no signs of when they're going to be able to reopen. On Sunday, 6 counties in the Bay Area enacted shelter-in-place mandates, effectively shutting down the entire Bay Area, and on Monday, Los Angeles County required restaurants, bars, gyms, and movie theaters to close, and many other cities are considering following suit. So with everything shutting down, what does this mean for commercial real estate? Well, first, let's talk about transaction volume and the deals that are going on right now. Now, commercial real estate is a really physical asset, so in order for deals to trade hands, people need to go out and visit the property, tour the property, and there are many third parties that need to go on site before a property can trade hands. And right now, obviously that isn't happening, and it's not clear when that's going to be able to happen in the future. This is bad news for brokers, but also really bad news for everyone involved with the transaction process, including title and escrow firms, surveyors, appraisers, and other real estate related professions that are directly compensated every time a transaction occurs. This also means that many deals that are under contract right now are likely to be dropped, which could cause major issues for sellers who may have an upcoming loan maturity coming up in the next 6 to 9 months. And while many people were talking early this week about the Fed cutting interest rates to essentially zero, commercial real estate hasn't seen a commensurate drop in interest rates for borrowers. Between a recent uptick in the 10-year Treasury, widening yield spreads for lenders, and the massive overall demand for refinancing properties, rates have stayed relatively consistent for commercial real estate investors that are looking to refinance or acquire properties. And speaking of acquiring properties, many lenders are putting the brakes on lending on new deals right now because there's so much uncertainty in the market. And again, this creates major issues not just for an acquisition loan, but also if a loan is maturing and that loan needs to be refinanced. Again, if appraisals and surveys and environmental testing can't be done on site, lenders are going to have to decide how they're going to move forward if a loan is about to mature in the next 3 to 6 months, and they can't get those on-site teams out to get to the property. Now, aside from the capital markets likely being on pause for the foreseeable future, owners of commercial real estate are going to feel a major hit here as well, and retail and hotel operators are likely to be hit the hardest in commercial real estate, and it's already happening. With travel restrictions and event cancellations across the entire world right now, hotels have already seen and will continue to see major dips in occupancy rates and overall event revenue. And for retail, with store closings imminent across the entire country, overall retail sales are going to plummet over the next few weeks. In fact, on March 18th, ICSC, or the International Council of Shopping Centers, sent a letter to the White House for business interruption coverage since so many retailers will be hit so hard over the coming months. And what's even worse about how hard hospitality and retail are going to be hit is how everything ripples down to the employees that work at those retail stores and at those hotels. Many people who work in these sectors are reliant upon an hourly wage, and if those people are out of work for 1, 2, or 3 months or more, many of them don't have an emergency fund set up and are not going to be able to pay their rent, which puts multifamily in a lot of danger, even in what is generally considered safer workforce housing investments. Many cities are also enacting eviction protection, which essentially bans landlords from evicting tenants for the next 60 to 90 days, which may be stretched out depending on how long everything is disrupted. And regardless of whether or not legislation is passed in order to make this happen, landlords don't really have a choice in this scenario because they're not going to be able to backfill those units right now and lease new space because very few people are looking to make a move right now with everything going on. Now, office properties aren't likely to see a major hit in the short term, but there are certain parts of the office sector, specifically co-working, that could be hit extremely hard by people working remotely out of their homes. For example, WeWork made a ton of news last year, and the company still has over 23 million square feet of commercial office space, and an extremely large portion of their revenue is generated through month-to-month leases. And when those occupants that are on month-to-month leases can't go outside and can't go to their WeWork offices, those people aren't likely to stick around and pay for something that they're not using, especially when times get tough for small business owners who are likely the people that are going to be on those short-term month-to-month leases in a WeWork space. And if this happens, WeWork's revenue could drop significantly, which would create a much higher risk for them not to be able to pay their rent to their landlord. Additionally, in the office space, we might see a more permanent shift to remote work if companies find that employees can be just as productive at home and they could potentially save money on office rent by reducing their overall office footprint. And if more companies adopt a more permanent work from home policy, that's going to increase vacancies in the office space and decrease overall rents in office buildings. Now, industrial might see a more permanent change here as well, but fortunately, this could be a good thing. So with more and more people stuck in their homes today, ordering things like groceries and household supplies from Amazon.com, many people who were slow to adopt e-commerce might become more permanent users after things are back up and running. And with that comes a more permanent need for increased industrial warehouse space, which means positive news for overall industrial rents going forward. So with all of this said, most sectors in commercial real estate are likely going to be hit really hard over the next few months because of all of these closures. So for example, if retail stores aren't making sales, then those retailers can't pay their rent to the landlord. And if the landlord doesn't receive their rent, then the landlord can't pay their debt service to the lender if they have a loan on the property. And when the lender doesn't get paid, that's when things start getting really messy, especially when this starts happening all across the country. Now, in this situation, in order to minimize the impact, it's going to be really important for lenders to be able to work out these loans with borrowers, and it's also going to be really important for owners to be able to work out these rent payments with their tenants. But unfortunately, what it looks like is that all of these factors coming together are going to create a sharp decline in net operating income for many commercial real estate properties across the country and the world. Now, in any scenario, the length of this situation is going to have a huge effect on how bad this gets in commercial real estate. Many owners will be able to withstand 1 to 2 months of down operations and revenue, but if store closings last 3 to 6 months or longer, many retailers and subsequently property owners are going to have a really tough time staying open long term. All of this is to say that it's really unknown how bad this is going to get, but much of this is going to depend on how long it takes to put this all behind us. Now, with all of this going on and so much fear and panic in the market, what should you take away from this, and how can you learn from this going forward? Well, number one is that, like in any recession, there's going to be a big buying opportunity once the dust settles on all of this. The overall supply and demand fundamentals of commercial real estate are still really strong, and that will continue to ring true as construction is disrupted over the next few months. Many extremely successful companies were started in the depths of the last recession in 2009 and 2010, and there's bound to be opportunity from this from a real estate investment perspective. Now, number two is really important here, especially if you're newer to the industry, and that is that more debt is not always necessarily better. Investors that have low leverage on their properties or no leverage on their properties are going to make it out much better than the investors with 70 or 80% loan to value or loan to cost ratios on their deals, especially in situations where they have tight debt service coverage ratios, where that net operating income can't drop more than 10 or 15% before the investor gets in a negative cash flow situation and has to fund additional equity in order to pay that debt service. This is what I mean when I say that leverage magnifies returns for good deals and bad deals. When times are good, leverage increases your returns, but when times are bad, it makes it much easier to get in a negative cash flow situation and potentially have to hand your keys back to the bank. Now, number three is from a career perspective. So if you're thinking about changing jobs or trying to break into the industry, don't worry too much right now. Not much has happened in commercial real estate right now, and companies are still interviewing and hiring. Many companies are going to Skype interviews rather than in-person interviews and just putting off that final meeting until whenever offices are open again. So if you have interviews coming up, there's still that need for the new hire. It just might take a longer time frame in order to get on board. Also, if you're stuck at home right now is a great opportunity to work on the skill sets that are going to make you a desirable candidate, especially if things do get tough and hiring starts to slow down. If the number of jobs are going to decrease, the more skilled candidates are going to be the ones that are going to land jobs. So the more you can build your technical skill set during this downtime is going to help you tremendously when things start getting up and running again. And finally, number 4 is to remember that on a long-term trend, real estate has historically gone up and to the right. So right now, things are scary and things might get more scary over the coming months. But remember that people thought 2008 was the end of the world in commercial real estate. And since then, we've seen over a decade-long bull market where tremendous wealth has been created through real estate investing. So even though there's so much noise out there, do your best to try and stay calm, stay focused, focus on the things that you can control, continue to get better as a real estate investment professional, and in the long term, you're going to be in a great spot. So again, I really didn't want to make this video, but I felt like I owed this to you guys to talk about how this might affect commercial real estate going forward. Now, as this whole situation unfolds, I'll make sure to make updates as necessary, but I plan to be up and running with regular content next week to help you land a job in the industry and analyze deals more effectively, especially as more opportunities might be coming up over the next 3 to 6 months. So thanks so much for watching. I hope you and your family stay healthy over the next few weeks, and I hope we can put all of this behind us sooner rather than later.